Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, it was another volatile week on Wall Street, not surprising really considering the Federal Reserve's announcement Wednesday night of another 25 basis point cut on both the federal funds rate and the discount rate. And even though the market had basically priced in these cuts, the market did rally quite sharply at the end of the day to show that it was really quite pleased that the cuts had been made. But as we said last week, the euphoria was very short-lived, and even overnight was enough for investors to digest the policy statement that the Federal Reserve would not be so willing to cut rates in the future, and was really bringing its focus back sharply onto the question of inflation. So this was probably the main reason, plus the very weak financial sector, that caused the big sell-off on Thursday, where the Dow in fact dropped more than 300 points. It was quite a panic day really. A 12-month chart now for the Nasdaq Composite Index, because I really want to show you the movement over this last 12 months with regard to the long-term average line here. As you can see, back in July we had what we thought may have been the top of the market for the time being, formed here with the big drop away on the concerns for the credit markets. And in fact we did have a panic day back in August when we in fact touched under the 2,400 level at 2,380 approximately, with a quick rebound. What is significant though is the volume action around this period. Excuse me. We have really two things to look at. The typical build-up that you would expect at a sell-off point here. More importantly, when there was a short recovery in the early part of August, that's when the volume reached its peak. Not so much at the buying point, but at the first opportunity to sell at a reasonable price off the top. And that's significant to us, particularly when it's reinforced by the fact that when the rebound did come on the news that the Federal Reserve was going to most probably cut rates and support the market to some degree, we did get the inevitable increase in volume on that day and the day after, but it was very short-lived. And notice how the volume has dropped away dramatically at this point here. These 2 points are significant, and even though the rebound has been really more than we expected and has in fact gone on to create a new high, it's done it on relatively low volume. The volume is starting to build again near this new possible top. We're well extended now off of the long-term average line, which is again a point to note. And all in all, we feel that this may again be another top forming and not just a continual trend further upwards. If I draw the long-term trend line, which really came from this point here we go, drawing it through there and not at the base of the panic action, but really at the base of the action over that 2 or 3 days, which is really that point, you'll see that the trend line now is showing that the new high formed on Friday with the rather good jobs report and the readjusted August figures has really reached a point well above the long-term trend line and ripe for profit taking and at least a short-term reversal at this point. With the market exhibiting such volatility at the moment, it's very difficult, of course, to call the market direction in the run-up to Christmas. We feel that there are still probably 3 scenarios possible, and the first one being the rather wide trading channel, about a 200-point trading channel for the Nasdaq. We're at the top of the channel at the moment, but unless the news from the financial sector improves, we could very well test the bottom of that channel before Christmas. And the news from the financial sector this week certainly hasn't been good. This Friday, in fact over the weekend, Citigroup have called an emergency meeting to really discuss the whole financial situation going forward. Also, bad news this week really coming out of the manufacturing sector, where the lowest expansion for about 6 months occurred in September. And this was also backed up by a poor report from the consumer sentiment reading. And all in all, when you add in the very high price of oil, hitting $95 a barrel again at the end of the week after a brief drop, and also the slight rise in bond prices, where more people seem to be quitting the stock market, and of course the very low dollar, really give a general feeling that the second scenario is one we mentioned last week, which is a technical pattern called a flag, which could be forming at the moment, a prolonged period of consolidation, where the market basically travels sideways before breaking out either to the downside or possibly again to the upside. And finally, the third scenario, which was a scenario we had in place about 3 months ago, where we feel that possibly this market is topping off, and in fact we are now just past the head of a head and shoulders pattern and moving towards the formation of a right shoulder. It's going to be very interesting, but until next week, it's goodbye from London.